Welcome to the Shakaama Live Show with your host, Shakaama. I just want to touch base on something. There are a lot of people who have a thing that they're into, right? A lot of the times, the people don't know the origin of where that thing came from. But let's talk about investing. Now, somebody asked me, am I investing in Bitcoin or why I'm not investing in Bitcoin? And what is stopping me from investing in Bitcoin? So, I am, maybe, could be going for my financial analyst certification. A financial analyst is a very rare commodity that giant corporations hire to assess their investment strategy. So he's the guy that is not an actual trader, but tells the corporation what they should invest in. If you can imagine, corporations actually invest in stuff just like normal people, right? But corporations have millions, if not billions of dollars to invest in. And that's one avenue of how they make their money. And the analyst assesses what's a good investment and what's not a good one. So that's the certification that I may or may not be going for. As such, I know a thing or two about investing. As such, I have my own portfolio. So today I want to talk about what it is you should be looking at as an investor and to determine what type of investor are you. Real general stuff, real easy stuff to understand. So here goes my answer. So everyone should approach investing in the most unemotional way possible. You should never, and you should put everything into investment terms that you possibly can, including, and now men are coming to this realization, including women. Why? Because women have taken the emotion out of love, relationships, and a whole lot of them see men as an investment opportunity. You can deny this till you're blue in the face, but the proof is in the pudding. Everything from whether or not she's going to cheat on you, and to the point that they literally have studies saying that women cheat more because women can, because they're women. Women can literally walk outside, snap their fingers, and 50 men, 50, if not 100, will come up and say, how can I help you, ma'am? Versus men have to do all the chasing, right? Women just have to make themselves available. And women, in their effort to be seen as chaste and pure, deny being cheaters, but the evidence is overwhelming, especially for women under 35. They consider relationships to be a non-thing completely. So if you then take the emotion out of men, if you take the emotion out of a relationship, you will approach it much better. And cheating also means that the potential for, if you get married and have children, that the children are actually yours or they're not yours. And let me recommend, I don't care how much she says she loves you, I have heard it firsthand from doctors that something overwhelming, like 60 to 70% of the babies that pop out in his delivery room are not the baby of the man standing there. He says it's outrageous, and he says, but he doesn't know what to make of it. But he's a doctor, so doctors aren't emotional. Doctors don't have emotion in their practice. They can't, because they have people's lives on their hand. They can't be all emotional in their things. So this is exactly what I want you to do when you're talking about investing. Get a DNA test before the child's even born. Yes, you can do that. I want you to be completely unemotional when it comes to investing. Why? Because a lot of times when you are emotional about investing, you hold when you should have folded, and you fold when you should have holded. Is that English? You know exactly what I mean. And let me spell it out for you if you don't. You believe in a company. You have their stock, and their stock is going down, 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 and you're still holding. Buy low, sell high. Buy low, sell high. If it's dropping, that means that's an indicator that you should sell it. They have a term now for people buying stock and holding them even if the stock breaks through the floor of the stock price. They call it hodling. Hodling or hodling. It's HODL. And they're popularizing these terms to get people to still hold the stock. I'm sure the owner of the company is very happy that people are holding the stock regardless of the price drop, because that helps the company stay capitalized, right? Take the emotion out of investing. Number one, they should invest their investment strategy according to real world factors. And what are those real world factors? Your age, your income, your goals of why you're investing in the first place, and your risk tolerance. Let's go over that. You're 20 years old, that's a type of investor. You're 60 years old, that's a type of investor. And unless you are just brain dead, you should not invest how the other type invests, right? And I'm going to go over that right now. Income. Do you have a low income? And now it's a fantastic opportunity. I'll give you a link. If you have no income, you can still be an investor. And you can actually make money almost guaranteed. Goals. What is your goal for investing? Is your goal for investing, let me give you a couple of examples. Is your goal for investing to just make tons of money? It's a goal. I'm not making fun of anybody. I'm not even cracking a joke. Remember, take the emotion out of it. Is your goal to just make oodles of money? Or is your goal to create your real nest egg that nobody can get to, nobody can break in and steal unless they hack all of your computer software and then hack into the investment account, which is going to take a very sophisticated person who probably, not to look down on anybody, who probably isn't going to waste their time with your investment because you don't have any money. Let's be honest. Who listens to Shakaama? Basically people without millions and millions and millions of dollars, right? Right. Is it safe to say that none of you have millions and millions of dollars and you listen to Shakaama and you watch my videos? So that's another goal. You want to create a nest egg, a real nest egg for when you retire, and you can have this goal at the age of 20. There's nothing wrong with that. That's not the two investment types of 20 versus 60. There's nothing, you can have the same goal. Your approach is going to be completely different at age 20 than it is at age 60. And what is that approach? The last final thing that I'm talking about, risk tolerance, your risk tolerance. If you are 60, you should be risk averse. You should look at stocks that go up and down, up and down, up and down. You should stay so far away from them as possible. Versus if you're 20 years old and you see a stock that goes 15 cents on the dollar all the way up to 600 a share. You should have a couple of those stocks in your portfolio as a 20-year-old. And guess what? You should also have gold, silver, commodities in your investment portfolio. You should have the really secure stuff, but it doesn't make so much money. And you should have just completely blow up volatile stocks in your portfolio as a 20-year-old. As a 60-year-old, you want sure stuff. You want income producing stuff. And did you know stocks can produce income for you? It's called dividend stocks. A lot of the tech stocks, a lot of the volatile stocks do not give out a dividend. A dividend is every quarter or every 2 quarters or once a year, the company pays all of their shareholder money according to the share price. right? And how much they made that year or made that quarter or whatever, right? However often they're going to give out the dividend, that's how they're going to assess how much per share they're going to give out. And that is income. And that is real income. And you can make real income, except you have to have a portfolio of about $1 million or $2 million or $10 million. But you have $10 million. You could be accumulating that $2 million over the course of your life. You don't necessarily have to be a volatility investor at the age of 20. You could be a dividend with the idea, if your goal is to create a nest egg. And so you buy stock and you put so many hundreds of dollars into your portfolio every week, every 2 weeks. And first of all, you're going to beat the entire stock market. A lot of times you're going to beat the entire stock market on your returns, because you're not only investing, and if your stock dips, that's fine with you, because that's not your investment strategy. Your investment strategy, first of all, is to accumulate as much of the stock as possible. So if it dips, that's a good thing for you. Your whole purpose is to make sure that it continues paying dividends like clockwork. So all of that is going to be compounded. And if you have the dividends reinvested into the stock, that's going to create compound interest and you're going to beat the stock market itself, right? You're going to beat the Dow Jones Industrial Average. You're going to beat all of the ETFs out there. This is not something that a 20-year-old needs to consider, but he could. Now, so the question is, will I ever invest in Bitcoin? Well, I'm closer to 60 than I am 20. Also, I'm risk averse in life in general. I don't leave my house that often. I don't like to go out. I got sick way before all of this sickness stuff. Every time I went out. Why? Because I stay in my house all the time. So I don't have all the bugs crawling around me that everybody else has. So when I go out and I encounter the filthy human beings that walk around the city in the public, I catch their bugs, and the bugs go, "Oh my God, this is fantastic, Martha. We're moving in." But I take a whole bunch of vitamins. A copious amounts of vitamins. So I get sick immediately. Almost by the time I unlock my front door, I'm already sniffling and sneezing and all that sort of stuff, because I don't leave my house and go mingle with people outside. It's probably not mentally healthy, but I'm risk averse, and I don't have a car ever since the accident. So I'm walking. When you're walking, you are open to all of the risks that walking presents to you. So I don't leave my house that often. I am risk averse. I have the entire risk averse personality. I'm a realist, but I'm risk averse. So when I say I'm closer to 60 than I am to 20, what I'm really saying is I'm risk averse. I probably invest like a wise 60-year-old. A wise 80-year. So my portfolio is 100% aristocrat dividend stocks. Aristocrat means that they have given a dividend out like clockwork for the past 10 years, like 10 to 15 years. 10, 15. I think there's, you're going to make me, anyway, there's dividend. Then there's something like MVP, and then there's like gold standard, and then there's aristocrat. So I think aristocrat is something like 20 to 50 years. Don't quote me on that, but all of this stuff in mine is actually a 50-year-old dividend, 50 to 100 years of handing out dividends. So I am killing it in the stock market versus all the people who voted in Bitcoin and all of that stuff. They lost their shirts. Some of them lost their life savings investing in that. And don't get me on NFTs. So, my portfolio, you can see it's at Patreon, patreon.com/Shakaama. you can see everything that I invest. And I am killing it. Thank you all for watching. I told you all on my channel, if you go to my community page and see what I type out as chatting with all of you all, I told you in January, invest in oil companies. My oil stocks are up this month 86%, and I believe overall they're up 300% plus. I believe I have 3 oil stocks that I'm investing, 3 oil companies that I have stock in, and I've been just killing it. It is providing me with income. I told you all in January to invest in. So anyway, I'm gonna get off, and I'm gonna leave you the links to my stuff, and hopefully you can go take a look. I'm doing this all for you. I know. I'm not asking for money either. How about that one? I probably should, right? That's probably dumb. But click on the link. Thank you all for watching. Have a fantastic